moving.
Well, was the stock market really counting on the Fed to send interest rates all the way to zero?
What's behind this violent reaction to the minutes from the Fed? Let's ask our Bulls and Bears, Jonas Max Ferris, Todd Wildman, Gary Kaltbaum, and Peter Schiff. Jonas, first to you, is the market overreacting?
There's no way the market was expecting lower rates. If you were expecting lower rates than 2%, with inflation where it is now, you mentioned 1%.
Some people say 2% is inflationary.
We had 1% before, but we had deflation back then they were worried about. Now look at oil, look at commodities. There's no way they were going to go to 1% again. So that, I don't think that was in the picture. I think what is scaring the market now is the dire forecast for the economy. I think a week ago, everybody was getting pretty optimistic that we were in the turnaround. The bottom's in the housing market. So let's go. It's real to reach. And now it's not looking like that. Even though a lot of people don't believe in what the Fed thinks about the economy, the fact of the matter is they have a sourer opinion than investors did a few days ago.
Peter Schiff has been one person who has not been optimistic in any way, shape, or form. Anything in the Fed minutes that caught your eye that matters?
Well, not really. I mean, I think the market was going to go down today regardless of the Fed minutes. I think the most interesting thing is that the dollar didn't rise at all. Even though it was obvious that the Fed is done cutting, the dollar still sold off. And, I think the Fed is very reluctant now to raise rates. They should be raising them. I think they're going to try to talk tougher, but I think they're afraid to raise rates because they might raise rates and the dollar will fall anyway, and that'll really put them in a bind. They need to be substantially increasing interest rates, not just by a quarter point, but they should double or triple them, and that's probably not even enough.
All right. Gary Kaltbaum, you've been pretty good in your prognostications as well. What do you say about what happened today?
I just think the market hit a wall. We had a bear market rally for a couple of months, and we hit a wall at some very important resistance. But I want to talk about something that I've been saying for a few months here, and that's the consistency of what we hear from the people who supposedly matter most. In the last 2 months, we have heard from certain Fed heads that the housing was looking to stabilize and things were going to get better. Now we hear it's not. Of course you're going to get knee-jerk reactions when you have such inconsistency out of the talking heads out of Washington. The only thing consistent about them is they change their mind every 3 weeks and markets get driven up the wall. Thus you get a day like today.
Todd Wildman, you were on the trading floor. Tell us what that was like.
Well, I think people realize that the Fed policy now moving forward is cross your fingers and just hope for the best. Because you read those notes and they're just crossing their fingers. Come on, let's go. The minutes came down and we were down small, and then everything sold off and people just came for puts, and it just got sort of ugly, and there's just no optimism, and there's really, for the Fed policy, they're hoping, but down here, there's really not a lot of hope. It's just a lot of bad news and not a lot of hope going forward.
Jonas, we had Vincent Reinhardt on earlier, a former insider at the Fed. He thinks that the real story with these minutes is not necessarily interest rates, but whether the Fed has overextended itself. Has it?
Well, there's certainly a sensation they're running out of tricks at this point. There's no more interest rate game coming. They have money left to loan to just about anybody found, but not unlimited money without causing rampant inflation.
Let's go to Shivani Joshi. She has breaking news on a... Desperate or smart? Microsoft launching a cashback incentive to lure customers to its internet search engine.
The program issues rebates to customers who use the site to find and buy products online.
Will it work? Let's ask our Bulls and Bears panel, Jonas Max Ferris, Todd Wildman, Gary Kaltbaum, and Peter Schiff. Gary Kaltbaum, Microsoft getting creative here, or is it not a great idea?
Look, anything to drive people to your site is a good thing, and I went to the site, and it's actually pretty darn good. It gives you great comparisons, and it gives you you get a discount on the lowest price, and they show you the comparables, but they have to market it right, and they have to market it big. I think Microsoft's biggest problem throughout the last few years when it comes to search is they've just been very quiet, very low in tone, and they've been beaten to the punch by the Googles of the world.
But Todd, at least they're trying. I mean, it may look a little desperate, but at least it is the good college try. Does that count for something?
Oh, exactly. It's desperate, and it is a great college try. And if they can advertise and they can publicize this, because it is a great site, Gary's totally right. Discover Card, American Express, they all have their miles program. This is a perfect adjunct right onto it for Microsoft. I think this could help them move at least with parity to Google.
I like cash back, Peter. Do you?
Well, not if it's dollars. But,
oh, geez.
the problem with The problem with Microsoft, it's the same problem anybody has who is going to be trying to sell products to Americans. Americans are broke. They can't afford them anymore. They might try some of these gimmicks, but the bottom line is if you're dependent on American consumers, you got to reinvent your business. There's a lot of consumers outside the world right now in other countries who are no longer going to be making their resources and their goods available to Americans. They're going to keep their money. They're not loaning any more to us. We can't pay them back. So Microsoft should be looking abroad
So
to try to make
nobody's ever going to buy anything, right?
Jonas, go ahead.
Americans are
what
done
business
buying.
are you talking about? Microsoft makes billions of dollars abroad from all their features and products and Office and everything. All right, let me get back to the focus and not the American consumer falling apart. I don't think you guys remember how Google took over Yahoo, but there wasn't any marketing and advertising and promotion. It was by building a better search engine. You build a better search engine on the internet,
but they
and
got
you will
a big
beat the
brand
competitors.
name.
You don't have gimmicks and tricks and giveaways. If this was such a great idea, there was a site called i1. Do you guys remember i1? If you search, no, exactly. It's owned by IACI now, but it was a double bubble 1.0 idea, and they gave away money if you searched there, prize money. It never became a Google because it's a ridiculous idea when it boils right down to it. And by the way, there was other .coms that failed called Beans, where they had, if you shop there, you all remember covering this 7 years ago. You won't forget how it worked. It didn't work.
Well, according to Peter, the beans would be worth more than the dollars, so maybe that's not a bad idea.
Oh, goodness. Thanks very much, gang. Well, no cash back incentives needed. We round out our show today with what you need to know. Gary Kaltbaum, you get first crack at it.
I think about 3 weeks ago on this great show with the two greatest anchors in the world, I stated that
He's coming back. We want this guy back.
You got it. I stated I thought gold was headed back over $1,000, and I think it started up in the last couple of days. I think we're going to see probably $1,100 here, and probably in short order. I think there's going to be a little melt up in the gold market here.
I bet Peter Schiff disagrees with you entirely, don't you, Peter?
Well, I said it was going to 5,000 last time I was in your studio, so 1,000 is just a little jump from here.
Wow.
Even after the Fed notes come out today, because they're not going to be cutting rates. I mean,
but they're not raising them. That's the problem. They're not raising them either.
Peter thinks in order to stop the slide of the dollar and stop gold from going up, you have to raise rates. What should they be at, Peter, the rates now?
Well, there's no way they're going to stop the dollar from falling. But if they want to stop the dollar from going to zero, they probably need to get up to 8, 9, 10% or more. I don't know.
Imagine what the market would be.
Jonas, take it from there, won't you?
I don't think these people, these panelists, these esteemed panelists, have read the World Gold Council's report yesterday. It just came out, hot off the press. Gold demand is dropping.
By the way, I should mention, you used to trade gold, so you know a lot of what you
I used to work at a gold fund 15-some years ago. Gold demand is dropping for jewelry, for industrial debt, across the board.
Is that a function of high price?
Well, it's not demand, it's not dropping
in tons.
Okay.
And supply has been climbing. In fact, people are selling scrap gold that's been around. And the production cost of gold for major miners, Barrick Gold Corp, go down the line under $400 an ounce. How is a commodity going to stay at double the price of getting out of the ground in light of falling demand and increasing supply? That is a huge bubble situation that's going to explode.
Go ahead, Peter.
Just keep thinking that way, and I'll keep buying it. People have been telling me that. The price of gold has tripled, and it's still going up. Remember, look at the argument I had on this show with at Bolin a few months ago when oil got to $100 a barrel. And everyone's like, oh, no, oil's going to collapse. And I said, no, $100 is the new support. Here we are, $132.
Well, oil demand didn't drop 20% in the last year like gold demand has.
And by the way,
gold demand is going to explode.
Go ahead, Gary.
Let me just bring up the Fed for a second. There is too much talk about what the Fed's going to do, what the Fed's going to say. I don't think the Fed has a lot of control of anything right now. I think they're just yapping away, and I think the markets are starting to ignore them real badly here.
Well, I think Peter would agree with you on that, but what do we need to know, Peter?
Well, look, what we're seeing in the airlines, the Fed is trying to save J.P. Morgan and Citicorp, and they're bankrupting American Airlines and Delta. What's happening is a massive decline in our standard of living. I talked about the coming consolidation of the airline industry on this show about a month ago, and you're going to see that. They're going to double and triple airfares. The average middle-class American...
How many airlines will we have in 3 years? How many airlines left?
No, I don't know, but middle-class Americans are not going to be flying. And, we're going to see a continued contraction in our standard of living. Prices are going to keep rising. The next major increase in consumer good prices that are going to go through the roof is going to be apparel. And it's going to change the way Americans shop for clothes. A lot of Americans are going to be learning how to sew because they're not going to be able to afford to go out and buy clothing anymore.
By the way, I shortchanged Jonas. You were talking about all commodities, not only gold that's going to be coming down, right?
We are in a commodity bubble. If you got sucked into the tech bubble, the housing bubble,
not me.
Don't fall into the
I didn't
commodity
get sucked
bubble.
into any
You
of
had
those
your
bubbles.
chance, Peter.
Hey,
This is
I know it
Jonas'
is very
thing.
exciting to see oil close at records every single day, just like the NASDAQ did before it collapsed 80% in early 2000. But there is no reality behind this, and it is going to short your whole portfolio
Go
down
ahead and
with
short it.
Well, you tell us what we need to know. I'm going to start hoarding clothes because I can't sew, nor will I ever be able to sew.
Clothes and toilet paper, Liz. Toilet paper.
Hoard
also.
everything.
Remember, go to BJ's.
Go ahead, Todd.
Listen, the option pros today, the pros in the market today, options, lodging in hotels, Marriott International, there was a large put buyer. All that means is the guy believes the stock's going to go down. It was a large put purchase. Marriott, it's down 30% over the last year. It could go down another 20 to 40%. That's what this guy's betting on. Marriott, look at all the lodging stocks because, you know, summer slowdown in travel and also business travel is going to hurt the hotels.
How do you know he's not long the stock and he's just ensuring he doesn't lose a lot of money if it falls? Couldn't that be a put buyer who's just covering his own long position?
Ooh.
Yeah, that's a good point. He could be buying insurance, but it looks like it's more of a play on the industry itself, how the trade went
Couldn't
up.
he be selling puts, thinking it's going to
doing
go
the
up?
right thing?
Yeah,
that's
he
for
could be
sure.
long it. He could be. There's no other option counter trade to it. One thing. Second of all, there wasn't much stock with the trade also. So it looks like this guy's making a $500,000 bet that
Could be a
Marriott's
girl.
going to
Could
be
be a
going
woman.
Anything
down. Or it could be a woman.
travel-related here
Yeah, a
is
trader. It
breaking
looks
down.
like the trader is making a $500,000 bet.
Oh, we got to go.
Gary, we'll get your remarks tomorrow. Thank you, gang. Peace out. We'll see you. Time to get you even happier than you already are.
Happy Hour with Rebecca and Cody live from the Bull and Bear Bar in Manhattan. See you tomorrow.